Hello and welcome to my June property market report. I'm in my office this month, but London is looking wonderful with the amazing weather we've been having. Everything's going on right now. Royal Ascot horse racing, Wimbledon for tennis, cricket at both Lords and the Oval, Henley Royal Regatta for rowing, and of course the British Grand Prix. But turning to London property, well, the London housing market is proving to be a little unpredictable, with the Bank of England raising interest rates again to 5%. We're expecting to see an impact on market confidence over the next few months. Those buyers who need a mortgage are bound to reassess their budgets and either look for a smaller property or something further out. But interestingly, at the moment, buyer demand generally remains really quite good. In fact, Zoopla recently reported that London property sales spiked in May and were 10% higher than the average over the last 5 years. Longer mortgage terms, existing fixed rate deals, greater equity in existing properties, higher levels of employment with rising salaries, and the continuing shortage of housing since the government scrapped targets for house building. These are all helping to soften the blow of higher interest rates, which means that experts anticipate house prices remaining stable in the foreseeable future, despite that wider economic issues. And bear in mind, many buyers have different priorities, so are less influenced by interest rate rises. For example, a lot of our overseas cash buyers are unaffected by interest rate rises. In fact, with increased rents, yields are looking very strong. Plus, many overseas buyers look for homes for children working or studying in London. So investing in a property rather than renting in this frenzied market is simpler, cheaper and offers excellent long-term investment potential. The red-hot rental market is leading many current renters, those that can afford it of course, looking to buy their very first home, again to escape the increasing rents. So there are real pockets of demand for homes, and we see no reason why this would change. London is London, and people will always want to make it their home. Value for money remains key, which explains why new developments remain so popular, especially those built by top developers. Regeneration projects with good transport links, on-site amenities and low service charges are really sought after. Over the last month, we've had several launches of several new developments across London with excellent transport, competitively priced, excellent rental yields, making them popular with both domestic as well as international buyers. In terms of the rental market, you won't be surprised that I'm repeating myself yet again this month. Demand is soaring as we're firmly in student season, with rents breaking all previous records. It's all down to the imbalance between supply and demand. Zoopla recently reported that London rents are up 13.5% in the year to April 23, with renters now spending 40% of their gross salaries on rents, which now average £2,000 per month. A challenging situation for young professionals, but great news for landlords. We do have some new properties for rental completing in several parts of London. In West London at White City Living, where we have an on-site branch, plus in the east at the Silk District in Whitechapel E1. Our Japan desk team, who sit here with me, are super busy breaking records with the number of Japanese families housed this year. But they still have more corporate executives arriving. Ealing, Hammersmith, Kensington, Nine Elms and Canary Wharf are all really popular for Japanese corporates. And lastly, I'm delighted to announce that our 20th London branch is ready and open at Grand Union in West London by Berkeley Group. It's a real milestone for us, and again we're delighted to be working in partnership with one of the UK's top developers. The latest phase is completing now, supplying some new rental properties, and I must declare, I do like Grand Union a lot. In fact, so much so, I bought a flat here myself, and it's turned out to be an amazing investment, giving a yield of almost 6%. This is a regeneration project along the Grand Union Canal, and as only phase 1 has launched, there are still opportunities if you want to join me and buy here. So yes, the market is subdued with inflation being so stubborn, but there are buyers and tenants in abundance. So if you want to sell or have a property completing soon, about to become vacant, or have a tenant wanting to renew, please do get in touch with us. So thanks very much for watching today from here in my office in Fulham Reach, and hope to see you next time at my video next month. Thank you.